Good afternoon, BC Richfield here, coming to you live from London. It's just flicked past midday, which makes it 1100 UTC. Big shout out to everybody who's joining the stream live today and everybody that's going to watch this on recording. So, what do we got coming up today? Start of the week, we want to take a look at Bitcoin, ES as well, any potential trade setups that we got in. A good friend of mine and a great friend of the Nest, Basebo, has asked me to just go into a little bit more detail about how or the fair value gap, really, how I've studied it, how I use it, how I trade it, and how we can look for opportunities with it. So let's not mess around. I want to crack this out in 30 minutes, ideally, keep it nice and condensed for you guys and also anybody that's watching this on catch-up. So if I'm rambling or there's any issues with anything, but at the same time, if you think I'm going through things too quickly, please do let me know. And also, if there's any issues with the visuals or with the audio, let me know. If not, we are going to crack on. So I've got my daily chart up here, as you can see, on Bitcoin. Posted out this morning, feeling kind of short-term bullish. The reason for that is, well, let me run through it with you. So for those of you that don't know, most of my studying as I was becoming a trader, when I really started to amp things up and when things changed a lot for me, was when I was studying people like SZ and ICT, right? So these are very much their concepts. Some of them I've kind of taken, not ICT concepts. He gets really annoyed if you do that, and rightly so, because he's the guy pretty much invented, or actually did invent, smart money concepts, which is the complete basis of my trading and how I trade. Now, there's a lot to go into, right? It's very detailed, the merging of time and price. But what I want to cover with you, because I get a lot of questions about it, is about the fair value gap, all right? So we've got it from here, yeah? Ryoki, hey, buddy. Learning from SZ now, mate, you couldn't, not many better legends to watch from it in the space. Unbelievable amount of YouTube content as well. I do recommend checking out ICT too. So what we're looking at here, so fair value gaps. This is a fair value gap, all right? So let me just zoom in on this for you. This one here is a weekly one. I don't want to start with the weekly chart today. I want to start with the daily, but one of my main reasons for being bullish in this at the moment is this weekly fair value gap that draws price, right? We're looking for areas that are going to be a magnet for price, and then we decant it down onto lower time frames, right? And then from there we can execute. Now, why are they magnets? So there's a lot of information on this, very in depth, in terms of the algorithms that are made for the trading systems, right, and how they look to find these liquidity gaps. But really, in its core kind of principle, in terms of what you're looking for, is you're looking for this, right? You're looking for an inefficiency. So what does that mean? Inefficiency, like you see this here, yeah? So as price moves up, we get this fast impulse move to the upside, yeah? What would be known as displacement. Now, in doing this, right, we take out this swing high, yeah? So we've come down, set the low, set the swing high, lower low. Breaking this, we've got a shift in market structure, right? And an impulsive move through it. As we do that, though, we leave this fair value gap here. And what you notice is these gaps tend to get retraced, right? So when we're looking to use them for confluence, and we're looking to find these gaps, then we're looking to either trade up into them as targets, right? Because they're going to be a draw. So to put this in more context, we've got two things here. We've got sell side liquidity and buy side liquidity, right? So what we're saying is when the sell side liquidity is taken, and if we see the right structure build on the lower time frames, then we target the buy side liquidity. Very, very similar to how we would trade a range. Petrix, my man, thank you very much for joining the stream today. Total legend here, Petrix. If you guys don't already follow him, get yourself on to Twitter and do so for many reasons outside of trading as well. So how do we utilize the fair value gap? Well, what we're looking for is we're looking for market structure shifts with an overall high time frame bias, meaning that the fair value gap gives us a target in which to enter a trade. So looking at this very quickly here on the daily scale, we can see we've got this fair value gap here. Now, if I hover here, we can see the price around here hasn't quite come into that yet. So the thinking is this, or my thinking is this, and I'll go into the fair value gap in a little bit more detail in a moment because I'll cover it as we can look at some setups. Now, in terms of the draw on liquidity, where's price looking to run to? We're looking for naked highs and lows, key swing highs and lows, and then for things like equal lows or double tops, double bottoms, any area where we believe liquidity is going to be sat, Yeah, because think of it like this: when price drops down, yeah, and as we did here, this big wick to the downside here, we ran these equal lows here, yeah. So price came down, ran these lows, got the liquidity, and then reversed. Why? Because it's how institutions move money, right? They're or moving price. Sorry, and the algorithms are really the ones that are moving price. So it's all about finding balance in the market. The same way, if you want to run an efficient market, you have to have buyers, you have to have sellers, right? So if a market becomes inefficient, weighted too heavily one way, then obviously the market wouldn't work. The dynamics wouldn't be correct. So what we're looking for is we're looking for key parts of liquidity where we think price is going to run to. Now, in this instance here, we came literally, I think, about $7.5 away from taking this sell side liquidity. That wasn't what reversed price here. It was these equal lows, yeah, or the liquidity that sat under these equal lows, right? So remember, every time you open a long position, your stop loss, yeah, becomes a sell order, right? So you're long, when it gets down to here, sell. Now, a lot of people say, well, if there's loads of sell orders down here, then when price comes into it, why doesn't it just continue to tank? Well, because you need to find balance in the market, right? So people that want to go long down here need that liquidity. They need those sell orders so that they can fill their buy orders. So smart money sat down here waiting to reverse the market. Price gets pushed into it. So people start to get short. Breakout traders to the downside here start to get trapped. We take that liquidity and then we use it to reverse. All right. So on a daily scale, the key things that I'm interested here at the moment is first of all that we've come down, we've swept this liquidity down from the lows. Yeah. We've now come up. Now, this is a bit choppy, right? In truth, very hard to see a clearly defined structure in here. But what I did like going into this morning was this bullish engulfing candle. All right. We had a small one here as well before, caused this pump to the upside. Bullish engulfing here, here, and here. We can see that at least the following days, aside from this one here, yeah, but on the others, they followed up with further bullish price action. All right. So it's all about creating our bias, right? Now, on this scale, on the daily scale, it's a little bit neutral, right? But I'm erring or leaning towards the side of a bullish bias. So now, if we go on to our 4 hour, right, we can see this gap a little bit clearer here. And we can see how price came up, filled this, yeah, didn't close above it, right, took this liquidity and now has sold off. Now, why did it stop here then? Which is a completely valid question. Now, in terms of where we're looking for, we could look at this as being the last down candle before a move higher that broke market structure. Yeah. Now, for the purists here, we would want to drop into lower timeframes. I know we've had this big long downside wick, but events like this that can be highly news driven as well can have a play around with price action, especially on risk assets, highly volatile risk assets like Bitcoin and cryptocurrencies. All right. So I'm sure I would get spanked for saying this on a number of ways from the purists for sure. But for me, when we look at this order block here, yeah, and please do go and check out ICT stuff when it comes to learning about order blocks and that, right? Because I know a lot of people reuse them and I use them and I should really explain them better. But, they're his concept, right? And one of the things that we're looking for with these to make them really valid is we want to take out prior liquidity. See these? Relatively equal lows. And even if it's not that you're looking for, you can see that there's a clear kind of stop to the market here, right? Price drives down into these equal lows lower, right? Then price comes up, breaks market structure to the upside. So what does that mean? Well, if we're thinking there's going to be liquidity in here, whether you take it from the body, including the wick of the candles as well, but if we just say from the body in terms of the overall actual volume, right, then that's what we're looking for here. What makes this a valid order block or an extra valid order block here is this inefficiency here, or the fair value gap. All right. Now, we can also see when price drives back down into that, we get that order block. Now, we do come and fill this inefficiency here as well. Yeah, before price then moves higher. So as we can see, as we start to draw through the time frames, we can see some different areas of which we've got interest. Now, how does that affect us? Well, if we drive down onto the even lower time frames, and I like using the 15-minute, then there's a few things that we're looking for, all right? in terms of when we want to look for our bias. So our bias is bullish. What have we got here? We've got the weekly open. This, for me, is massive. Now, again, not one of my concepts, but one that you should really take time to learn if this is the type of thing that interests you. Right. If we're talking about the range here, yeah? Now, if we want to take this from here to here, we say to ourselves, okay, fine, it's a little bit choppy in here, but there we've exceeded that. We don't go higher. If we're talking about the low of this move to the higher before we've broken market structure. Now, why I've only got a 0.5 level here. So again, this is something that's taught. If we're looking at premium and discount, now if we want to go long, yeah, discount means that we're getting in at a good place below the 50 line. Over the 50 line means that we're paying a premium. All right. So if we're paying a premium, then we have to expect this to be slightly riskier. Now, what made this setup down here so attractive? Now, one of the things that you've got to get used to trading price action is you've got to be, or really successful trading in any respect, is you've got to be comfortable buying when people are selling, right? And you've got to be comfortable selling when people are buying, because that's the liquidity that you want to jump on board with, all right? Of course, you're not going to be right all the time, but if you stick to it, right, and you learn how to read price action properly, then it can be incredibly lucrative. Sorry, just having a sip of my tea. Right, so what are we looking at? Now, when we were down here, yeah, so we're coming through 5 o'clock in the morning, 4 o'clock in the morning, 4 to 5, that's this time, so that'd be an hour earlier for UTC. Now, we're down here. We've dropped below the 50% line, right? So price is at a discount, right? Meaning that if our theory is that we're going to go higher, right, which we've just discussed, so we've said, look, our bias is bullish. Where have we got? Well, we've got really clean and clear upside targets. Let me flick these on for you. Okay, and here they are. So I'm just going to get rid of this. Well, no, I'll leave that on for a second. But you can see the buy side liquidity up here, which is our main target. We can see the sell side liquidity down here. Now, like almost like trading any range, from here it gets quite simple, right? So if we go above here, yeah, we start to break down into a bearish structure, then our opportunity is for price to go from premium down into discount, right? Meaning that it's going to hunt here via the weekly open. So there's our scalp shorts, right? And just literally, I was just saying this to someone over there, look, and now we've run, while we're here, nice and live, we've run the buy side liquidity, right? So now we need to wait for the reaction. If price gets up here, yeah, and starts building a bullish market structure. Oh, I'll run into my own thing there, hang on. Starts building a bullish market structure from here, right? Then we can reassess and we can look for higher targets further and higher up. All right. However, if we break down, then we know we've got two clear targets: weekly open and then down into this area below here. Right. Weekly open into here, down into discount. If we get that, then we know we can look for some short setups. We can also see what reaction we get here, targeting ultimately the sell side liquidity. So how would we look to get involved in this down here? Well, I only trade certain times of the day. At the moment, we're in the London session, but it's a bit late in the day for me in the London session. I'm going to be all over this come 12:30 and especially 1:30. That's when we're looking towards the New York Open. And that really, really interests me. All right, really interests me. However, what could we do here? Well, there's a couple of different ways, all right, in terms of trading this. So we could wait for this here. And let's just mark this up so we can see it. As you guys know, in terms of patterns, yeah, so we're coming down here, pushing up, right, down, high, that breaks the low, takes liquidity, right. We've got our structure break here. First of all, when that comes down, doesn't close above here, we then sweep this liquidity again, close above this high, and this can be our entry up here. All right, if we were to break this down onto the really small time frames, all right, and Femex has been struggling a little bit, as we can see here, so it all gets a little bit gappy, right? But while we're inside here, this structure, very, very clear what we want to see. We want to see this liquidity run to the downside, yeah? That's key. Then when we get that, we're looking for our structure break, right? Let me pop this on a 2 minute. Let's just see if we've got this down here. See if it's a little bit less gappy for us, all right? So what are we looking for? We got our high, we got our low, right? Everybody see that? Now, again, lots of questions around what constitutes swing high, swing low. So for me, we're looking at the 3-candle pattern here. So if this is our first candle, let me zoom in for you a bit, guys. This is our first candle, right? This needs to be lower than this. So this needs to set the peak of the high. This then needs to be lower than that and then trade lower. Then when we come up and break this, which we do here, this is when we get our shift in market structure, all right? And then what we're looking for here, if we want a valid setup, is we've got our break, yeah? We want to hunt down our fair value gap, yeah? So this move up here that breaks above isn't the strongest, but we do get a fair value gap in here. So remember, guys, when we're hunting the fair value gap, right? Let me just make this blue. When we're hunting the fair value gap, we're looking for a 3-candle pattern, right? Now, this is candle 1, candle 2, candle 3. We're looking for the gap, if there is one, between candles 1 and 3. And then we're looking for price to retest this, as we can see we get here, before moving higher. Now, that would be a valid entry, right? However, if you had your stops under here, you'd make maybe 1.5, 2R before it came back down here. But then, obviously, as it does come back down here, yeah, it takes out your stop if your stop was there. If your stop was under here, however, then you'd be in a position to move higher, all right? So, can anybody spot the next fair value gap on here? Yeah, in terms of this move here, see this big displacement here to the downside, all right? And then when we come back up, we get these moves. We've got fair value gaps here, here. I'm not saying you would trade all of these, right? But in terms of getting your eye in to spot them and how they interact with price, that's what you want to be looking for. So that could have been our low time frame entry here. For me, if I'm trading London, I don't really like trading London on a Monday. I like to see how Monday's range develops, right? And I prefer to trade the New York session. So for any of you that saw the Twitter post this morning, or for those of you that didn't, really easy to go over it now, this here is our target, all right? So entries in here, running up to here, really, really nice and simple. We're just basically playing one side of the market to the other side of the market. And all we use for that is our market structure, our key highs, key lows, and our fair value gaps, all right? Then the important thing here, guys, like with any form of trading, is to have a good high time frame and medium time frame bias, all right? If we've got that, then it allows us opportunities, right? So where are we here? Well, we've taken out the buy side liquidity now. We've had a really strong move through this. So if price was to start breaking down here, yeah, and we lose this level, then I'm going to be thinking, right, okay, well, price is going to break down here. Maybe we come down for the weekly open or the sell side liquidity down here, yeah? If not, then we're looking up here, which if we remember is our daily fair value gap. And again, you want to be key with the time frames you're using, right? Because what else can we see here as we're discussing? Price comes up, sets the high, sets the low, lower high. So where's our shifted market structure is here, yeah? What do we have here? After a really good displacement candle. So again, something ICT teaches, I know SZ is very keen on it as well. EXO's another excellent exponent of this, is how price is moving into a level, right? So if you see a weak move in, then okay, maybe you see a big, strong move like this, yeah? And what does it leave here? Our fair value gap, all right? So what could we be trading into now? Certainly what we would want to be conscious of as we come into here is this, right? So this is what we've hit here. So this is where the liquidity is. So as we're getting in on this level, but we got to remember this takes priority, right? This is a daily, this is an hourly. However, if price starts to break down here, we want to look left and say to ourselves, okay, why is this happening? We've got our clean market structure break line here, yeah, or like our breaker line, as I would teach in terms of a pullback method. Yeah, and then when we come up to here, we're in. Sorry, guys, let me just check the comments a minute. Just got a couple in here. Ron, hey, buddy. In my situation, it's not just the volatility. It's stupid phone that won't rotate when you want to. And Google Assist keeps turning itself off. I do, mate. I actually had some technical issues myself this morning, which thankfully was fixed by an awesome member of our team. Glad to hear the phone is catching up. So, guys, I'm hoping this all makes sense for you. Double R, hi. How much do you incorporate volume analysis with this trading strategy, and what tools do you track volume by, if any? No tools, just price action for me here, bud. I do occasionally use an RSI in that, especially if I'm looking for anything kind of on the macro. I like how that can kind of give momentum, but really what I'm looking for is any kind of range, the highs to the lows. We're waiting for the extremities to get run where we know there's sell side liquidity on the lows, buy side on the highs. If we deviate, we return within that. We look for the market structure break, in this case to the downside, in which case we would then be looking for shorts. However, if we come down here, let me just clean this up a minute. If we'd come down here, first of all, so if price had broken down here this morning, we'd taken out the sell side there, and then we'd come into this and managed to get back above, right? Then when we close above the high that sweeps the low, that gives us some long opportunities in there as well, okay? Gregor's M, did we hit the bottom or not? I don't know, mate. Very rarely know until after it's happened. That's why I prefer to trade level to level, and then that way we don't need to be worrying about bottoms and tops. You don't need to catch bottoms and tops, right? Once you know where liquidity is, then you can find your trade setups on there. And in terms of investing, as long as you understand you've got the good, keen profile, and an understanding of your investment, especially your risk tolerance and profile, then pop over to the Nest, guys. Check out the awesome traders we've got over there, especially some of the long-term guys. Obviously Birb, who's a legend, but Julian, Milky, these guys on the fundamental side are brilliant. The whole team over there are really good. Really kind of split skill set between longer-term investors, traders, scalpers, fundamental analysts, algorithmic traders. It's really interesting. But for me, I'm purely thinking about where the liquidity is. I'm thinking if price is going to come into here, right? Price comes into here. Now, while we're in here, right, what do we think is going to happen? We don't know, right? We've run into this area of liquidity here, but what I'm saying to myself is if we're coming down here, and we break down into a bearish market structure, then I know where my next liquidity is. So I can trade into this level here, right? So what happens? We break down from this level, we lose market structure again. Well, we know where our next liquidity is, right? Under this low here and under this high time frame sell side liquidity. All right. So let's take a look. As price action develops today, the other thing I want to touch upon is time. A lot of people ask me in terms of times, trading wise. So for me, I start getting interested very, very soon. All right, 12:30. And then the real action happens here at 1:30. All right. That's when New York step into the session. That's when we get a lot of volume, potential volatility, and algorithms start waking up. All right. So just go back through your charts, right? It's all based on New York time, right? So you've got 7 to 8:30 New York time, and take a look. See, I always like it. I always find it really, really interesting actually looking at the concepts of time and price and how they kind of move. So this is our overall target to the upside. Price has had a nice push up from down here as we discussed and as we looked at this morning on Twitter and with the group. Now price has taken out the buy side. It's quite simple. We either push up to find liquidity higher up. If we start to break down, then we target sell side via the weekly open. All right. So let's take a very quick look at ES, and I'm going to show you a couple of things on here as well that we're looking for just to kind of cement the fair value gap process before we start kind of closing things up for Monday's session. So here we are, and let's look at a prior move. So where were we here? So this red line here represents our sell side liquidity. All right. Now, we came down and took that out. Now, this sell side liquidity that's down here has been left from this. So we didn't know that was there at the time. However, we knew this was. So when this is here, quite simply, when price stops here, where does it come down from? Here, right? So we now know where our buy side liquidity is. And you can just save these as different as different ones, right? And then that way, when you flick them on, have them saved, you've got your buy side here, we've got our sell side here. What's this area I've got highlighted here, guys? Morning, Justin. Ryoki. A wise man once said he made his money by never buying the bottom and always selling too soon. Yeah, I can imagine. I mean, look, you don't need to catch bottoms and tops, guys. You just need to just understand how price moves, right? And you're not always going to be right, but as long as you make sure that you're right more than you're wrong, right? These strategies, professional traders earn their money over time, right? Not winning out there, winning every single trade. It's all about risk and money management. Justin, good morning, bud. Thanks for joining the stream. So what's this, guys? We've just discussed it. 3 candle pattern, 1, 2, 3. We're looking for this. Let me zoom in for you. Right. Here's our fair value gap, the inefficiency. Okay. So here we're now looking to move into this. Remember, we don't know what's going on above here. Yeah. We just don't know what this price action is doing at the moment. We're here. We've dropped down. We've taken out the sell side liquidity down here. So we're now interested to see if price is going to run up and try and attack the buy side liquidity up here, or if it's going to break down further. Yeah. So we're going to let's go to a 2-minute chart. And normally you would scroll through the time frames, right? So let me just get rid of these. Right. And you're trying to find that from your 5-minute, 3-minute, 2-minute, and 1-minute. But let's just look at this. So remember our theory. We've taken sell side liquidity. Now, if we see bullish price action, yeah, then what do we expect? We expect price to move higher, right? So what do we want to see for that? We want to see a shift in market structure. Here's our low, our high. We take out that low, okay? We create this high, yeah? We don't pull back from that, so that's not valid. We then create this high here, and we come back down, right? So as we take out this high, low, here's our high, here's our low here, here's our swing high, we come back down into here, we take out that high, yeah? That's where we get our shift in market structure. And we get a good impulse move through that as well. Now, where's our fair value gap? Here. Okay? So we would look for retracements back down into that level. Now, remember, guys, that's on our 2-minute chart, yeah? So, if we drop down to a 1-minute chart, all right, and we didn't get our entry there, not a problem. Here, we've got our high, low, higher, higher, yeah? So as we come up to here, yeah, we're saying to ourselves, do we have a shift in market structure? Yeah, set the low, come up to the high. We want to see a powerful move up into this level. We get this pump up into the level, yeah? Where's the displacement in this candle? Can everybody see it yet? This fair value gap. All right? So this is what gave us our entry. And you know what? We might not be right. Yeah? We might not be right. But if we're not right, our risk is here. Yeah? And our potential upside is all the way up here. Yeah? So if we look at that in terms of risk to reward, we're entering here, and you can enter however you want at this. You can do it on the top line. You can do it in the midline of the box. But let's just say worst case scenario, we've taken it on the top line, right? And actually, you can place your stops under here, right? You can place your stops under there. But let's be extra safe, and let's go under the swing, this swing low, yeah? And here's our target. And we want to just shave off a little bit before, make sure we get our orders filled. You got a 7.3R trade there, right? So if you can find these moves, yeah, then you can afford to be wrong once in a while. And don't be afraid to be wrong, right? You know, there's so much stigma put out in the space, especially with Twitter, you know, the groups, all the bits and pieces like that, right? Don't be afraid to be wrong. You know, we're not looking for perfection. Perfection doesn't exist in the financial markets. What we're looking for is probability and high probability trades. Justin, thanks very much, bud. Very kind of you and good for you to be here. Glad you managed to catch one of the sessions. Basebo, how do you identify 3 candles pattern? So in terms of the fair value gap, mate, or of the swing high, swing low. So the swing high, swing low, right? What we're saying is, in terms of sometimes when price action gets a little bit choppy, if this is what you mean, man, apologies if you don't, but I'll cover it quickly anyway. You see how we've got this And you can do this anywhere, right? If you're uncertain, obviously when you get ones like this, you've got this nice V, it's quite clear. But as you're getting in here and it looks a bit choppy, how do you know this is the swing low here, right? Because we've got this candle here. This candle then exceeds this candle. So you see how it makes that nice point. The following candle, yeah, cannot trade below this one, yeah. And then when you see price make its way up here, then that's when you know you've got your swing low. If it then drops down lower again, yeah, let's say, for example, this was lower, then that creates the next swing low, and you're looking for a key takeout of the high. All right. So look, guys, I hope that's been an interesting introduction to the fair value gap. Something I'm going to go over a lot more detail with the group. So do come along and stop by the Nest if you're interested in that. Be more than happy to run through that in a bit more detail. Now, but just getting spammed by someone trying to promote best adult dating site. There you go. Apologies for that, guys. God, they're persistent though. Right. So how do you identify the three candle patterns? So for base low, in terms of this, if you're meaning in terms of the fair value gap, mate, what we're looking for is the first key thing, and you can do this on absolutely any time frame, yeah, on any time frame, on any asset. So let's just pick one completely at random. What have we landed on? We've landed on CRV. Let me do this with you really, really quickly, right? So, hello from Serbia. Hey, bro, how you doing? Good to see you. Thanks for stopping by. Okay, CRV, this is where we are. Let's turn all this off. Bang. Right, so daily time frame. What are we looking for? We're looking for a bias. Pretty difficult to be bullish with this bias here. However, what we can see when we look left here is that we've taken out some lows as we've come into this level. Yeah, so as we've taken out these lows here. So as we come into this level, we've run these lows, right? We can see by the big tail side wick that we've got bullish momentum, right? Just as in terms that we've got buyers down here, all right? Now, the only thing that would have me bullish on a daily scale here is this engulfing candle, yeah? Normally when we get a bullish engulfing candle, as we see here, yeah, then we get bullish continuation afterwards. Doesn't always work, as we can see from this one here. We got that pump up into these highs, beautiful, but this one here we didn't. So again, we always have to play it into our thinking. It doesn't make up the core of our strategy. We're plugging it in as one of several elements. So price runs these lows. We get these big buy pressure comes in here. Right, I'm going to move to our hourly chart. Where are we here? So we're saying to ourselves now, right, okay, this is the sell side, remember? Yeah? So if we've taken this liquidity, we've come down into this area, what do we want to see? We want to see bullish price action, right? We want to see that bullish structure. So even on an hourly, yeah, price comes up, sets this higher, pulls back, takes structure to the upside here. Right? Takes out that. Here's our fair value gap. All right. Entries for longs. Into where? Sell side liquidity that we would expect to be up here. Buy side liquidity, sorry, we would expect to be up here. Right, actually make sure I've got that right on the top here. But obviously as we're coming up, we want to be aware of a few things here, most notably these key highs, and this one especially because they're relative equal highs, all right? So that one there, but this one here, see how they're relatively equal highs? So we think there's going to be liquidity up there. So we can say to ourselves, well, if we want to get in around here, we'd obviously drop this onto the lower time frames, and that's where we'd be looking for a pump up into, all right? The other thing that we would want to be conscious of as well is the overall range that we're trading in, and remembering to stick to our higher time frame bias, all right? I'm going to drop this just onto a 3-minute chart for you again, just to show you, if we get rid of this, right, show you this on a lower time frame. All right, so we see we have the big sell-off over here from the sell from the bottom of the sell side liquidity, and we're saying to ourselves, okay, once we've run that liquidity, remember that's here, yeah? Remember this was our low here, right? Now, what else could we look at in here? Well, we can say to ourselves, well, here's our break-in structure, yeah? Does this form what I would call a breaker base, yeah? Where we're looking at this now as support. What happens with this area here? Look at these inefficiencies. As price comes back down into this area, we're just looking for our market structure breaks. All right. Now, first thing we want to see is a key low taken out. Yeah, here's the low. So the low gets taken out. We've got an overall bullish bias. So we're looking for long setups here. Yeah. What happens? Here we've got the high. Here's our market structure break. Okay. We get that here. It doesn't really get into the level like I'd like to see it. All right. You've got a micro structure breakdown here as well. This would be a lot more encouraging, right? So if we have this as the structure break, here's our inefficiency, our fair value gap. And here's our long entry, all right? Now, price can obviously meander away from this for a while, but it doesn't change the fact that we're saying to ourselves here, we're saying, well, this is where we think price is going to react, right? Price is going to search for this liquidity here in order to fuel the move higher, all right? And then in terms of targets, what we'd be looking at over here. So first of all, we want to take the easy and clear target. So this is our move here. Where's our easy and clear target? 50%. Remember what I said to you? Discount premium, yeah? So if we're bullish here, we're saying, okay, we're buying at a discount here. Don't buy above here, all right? Too expensive. Where do we hit? To an absolute T, yeah? The 50% line. So how would our entry look? Well, quite simply, as we come into this area here, yeah, we've either got limit orders sat here, or what else are we looking for? We need to keep the principles the same. Let's move this back a little bit. We've hit our key area of interest. What do we have here? We have a low, we have a high. What do we do here? We got a market structure break, yeah, or a market structure shift, as ICT would say. Tell me off for that. Right. So, what do we have here, guys? High, low, big impulse move, yeah, through this displacement. What are we then looking for in this area? Fair value gap, yeah? Boom. Entry, stops under here, yeah? So of the 3 candle pattern, 1, 2, 3, yeah, you can take the low of that candle, or you can take the ultimate swing low, all right? Where are you targeting? 50% line, yeah? That's where you're going to take your profit, all right? And at that point, then you're saying to yourself, okay, what does the market do from there? If it comes back into this area again, am I still a buyer? Absolutely. Emar, hey buddy, good to join. Just a couple of questions here. Double R, do you know if fair value gaps are similar concepts to single prints used in TPO and structured trading strategies? I wouldn't like to comment on that, mate. I don't really have experience in that myself. So yeah, apologies. I don't, unless I know something quite intimately, I don't really like to comment on it. I don't like to pretend to know everything. I certainly don't. But yeah, unfortunately, I'm not entirely sure. But if it's anything to do with the idea of the algorithms in terms of the trading systems, the bots basically that are targeting these inefficiencies to launch price, then there really, really could be some crossovers. But come and, if you've got any info on it, come and drop it in at the Nest, mate. Be happy to have a chat with you about it. It's certainly always good to learn of that. IMR, legend. Hey, buddy. Justin, I feel I got the charts down. Patience to wait for my setups is where I fail. Yeah, well, that's very, very commonplace with most people. Very, very much so. You know, it's waiting for these things to develop, right? It's being patient, having the patience to wait for them to develop. Okay, that's where most people go wrong. So let's just have a really quick look. Let's have one last quick look at Bitcoin. And then, actually, let's take a look at the DXY. We've taken a look at Bitcoin. I'll just be going over old ground. We know where we are. We've run buy-side liquidity now. If we start to break down, then we go and we hunt for sell-side liquidity. If we keep pumping higher, then we've got our higher targets, all right? Now, much as people like arguing with me about this on Twitter, the correlation is strong at the moment between risk assets and DXY, right? So if we're seeing a pullback on DXY, then we're normally seeing a pump on risk assets like Bitcoin. If we're seeing a pump on DXY, and for anybody that really wants to argue this point, just notice how horrific things have been for risk this year. Yeah, can't really see a correlation there, can you? This thing just pumping up into the heavens while Bitcoin's been doing completely the opposite. It's not always correlated, guys, right? So don't listen to people that tell you it always is or it always isn't. But do your own research with this stuff. And for me, this is a really nice counter indicator here. If this is showing weakness, I expect a bit of strength in risk assets. If this is showing strength, then I expect a bit of weakness in risk assets. All right. Double R, cheers, buddy. Yeah, come and have a chat, man. Always very interesting. This is a very interesting session. Can you check XAU? Yeah, Imran Khan. Do you know what? Let's have a quick look, shall we? So XAU USD, mate. Let's have a look. So, going through this, let's just do one last top down before we call this a day then, guys, right? So, for me, and in truth, this is what I'm doing. I start on a weekly, especially traditional assets, right? What am I doing? I'm looking left. This is a good liquidity pull down here. This is what we call relatively equal lows. Let me have a look. Double R, cool. Is it free to join the Nest? Yeah, you get a free trial. There's different membership programs available. It's very inexpensive, but we do a free newsletter as well. Take a look down in the comment section on YouTube. Yeah, in the description, there should be some links through to there, or just come and drop me a line on Twitter and I'll get you a free trial set up. Really, really inexpensive, great trading community, lots of educational material and access to professional traders like myself who are trading there every day. But come along, try the free trial, see what you think, and you can always sign up for the newsletter as well. Loads of good alpha comes out in that every week. So here we go. We've got our equal lows, yeah? Here, or relative equal lows. We're expecting liquidity down there. So what do we want to see here? Well, we want to see this get run, get it bullish again, and then we can consider a pump. So on a weekly scale, what else have we got? We can see prices run into these equal lows. Yeah, so if we draw a line across from here, actually not the best line, actually. Hang on. Make sure that's level. Or my OCD will go nuts. Here we go. Boom. Right, so we can see that we've taken out those equal lows. What else have we done? We have swept this low, right? So there's two things here telling us that on a weekly scale, this could be ready to move a little bit higher. So now below that, what have we got here? Below that, this becomes our weekly sell side liquidity. Buy side, you could say, is here. Yeah, the truth is, again, if we've got this up candle here, then if price really is going to remain bearish, then we shouldn't exceed that. But that can give us a target to move into. I think there might also be a very small fair value gap there that we'll take a look at. But I like this high here in terms of on a weekly scale as well, guys. Remember this, we're decanting this as we're going down through the time frames, yeah? So that's where we are on that front. Let's have a look here. What have we got? Nice and clean. What have we got here? We still haven't run these highs here, and we have got this fair value gap though, right? So remember, like I was saying, yeah, we've come down into here. What have we had? We've had this breakdown. We've come back up here. We've left this fair value gap here, right? And I think what we're looking at that may have run into here is as this has broken down. Let's zoom into this one a little bit. Yeah, because we didn't take out these highs, did we? Which was quite strange. Normally we run those liquidities right to the highs, but I think actually this fair value gap here is swept up. It can, of course, go deeper into it, especially with highly volatile and volume-based risk assets. So let's take a look at that as we go up into here. Now, I know this is gold, so it can move slightly differently. But like with Bitcoin and stuff like that, you very often see them run these before then retracing, all right? But we do also have this up candle here. If we don't want to consider that, we've got this up candle here, which makes a really nice order block. Why is that valid? Because as we break down, it creates a fair value gap on the breakdown. Then we have this fair value gap afterwards as well, showing us that there's probably going to be a lure back up to the highs. Now, on a daily scale, we can see here we've got our low, we've got our high, yeah? So when we came up and we took out this high here, Yeah, that was our break-in structure. All right. And then we've come back up, hit into these, and now we've come back down. So as we stand at the moment, we're kind of a little bit in no man's land. So let's take a look on the hourly. Right, now the hourly tells a slightly different story here. Yeah, we would want an overall bias, right? But if we're getting into, as we are now, we're getting into that zone that I like to trade, yeah, around the New York Open, or the build up to the New York Open. What we can see here is we've taken these lows, yeah. Now what we're looking for here is we're saying, okay, well, where's a nice clean target? These are almost relatively equal highs, but they're not quite. So let's take a look at this one and say, okay, maybe there's probably liquidity above here. If it's not resting above here, then it's going to be above here. So let's mark this up as our main buy side liquidity. All right, but we want to be conscious of these highs here as well as we're coming in. Now, what we see here is when price came down and took out these lows, if we're looking on here, right, and let's just say, for example, let's drop this down to a, no, actually, what am I talking about? 15-minute first. Consti, hey, bud. Imran Khan, you're very welcome, mate. Hopefully this is useful. So as I'm looking at this on a 15-minute scale, we can see our liquidity sweep down here, right? Again, what are we going to do? We're going to take this move top to bottom. Yeah. Now, when we came back down here, all of this point, if our belief is this is going high, then this is the area that we want to be buying in, right? So now we've got that all lined up. We drop down to a lower time frame. Let's see if we can nail this one on the 3-minute. But again, you would sweep down through the different time frames, right, to find the optimal entry. 5-minute down to 1 minute. So here we are, right? Doesn't take out those lows, doesn't take out those lows, right? We get our shifting structure here when this low is taken out. Now, where's our structure break? Here's the high. Right, now watch this carefully, guys. Now, you want to see, ideally, a more powerful move through this, right? So a faster move. But as price comes up to here, it lags away. We don't take out that high. However, we set this swing high here, right? So when price comes through, we have our structure break to the upside, right? When this candle closes here, what does this create? Our fair value gap, right? So that was our optimal entry there on the low time frames. Now, if we're looking for this in terms of where we think this is going to go, now again, we knew here as well, right? We knew here. You can get in these moves a little bit later. We knew where our 50 line was. We know up here we're in a premium. So we're now saying to ourselves, we don't think we'd want to be getting long here, right? If we think that there's our buy side liquidity up here, yeah, or that we're going to run these highs, then what we want to be watching for here is what price does around here. Yeah, so let's say we make it up to here. We get something like this, right? And this break of structure to the downside, then this is where we're hunting for our fair value gaps, or we're looking to enter here on our breaker line. All right. So look, guys, I hope that's been insightful, or at least piqued your interest a little bit. I wanted to cover that off for you because I get a lot of questions about how I trade that, and it's the main way that I do trade. All right, I see things level to level. I'm looking for liquidity above and below levels that I would call extremities, and then I'm looking for these reactions, either the breakdown in market structure and a pullback to a fair value gap once I'm convinced that we've taken liquidity, right? Or I'm looking for these structured breakdowns, in which case then we want to see lows swept, right, like we get here, the high that sweeps the low, yeah, and notice how we get this nice retest of it there that gives us a good entry point lower down, right? And again, yes, these can be risky, right, because you are getting in at extremes. We're not trying to catch the bottom. We're waiting for the shifting structure to move to the upside, and we're waiting for the liquidity to be swept out. So I hope that has helped. Happy to cover this in more sessions moving forward. Like Basebo, pop over to the Nest, come and drop me a line if there's anything you'd be interested to see, or come and catch me on Twitter. There should be a ton of really useful stuff, links, free trials, bits and pieces for you down in the descriptions. If there isn't, or if you have more interest in it, just drop me a line on Twitter, guys, and I will hook you all up. Now, I am going to be back live on Wednesday for a nice session. We're running that one a little bit later, so we're going to try and run it into the beginning of the the London session and New York crossover, in which case, hopefully, we can get ourselves some nice trades going live. All right. Thank you very much for everybody that jumped on the stream today. So many of you on. Really do appreciate every one of you. I know a lot more of you are going to be watching this on recording as well. Again, do reach out if you've got any questions. And on Wednesday as well, we'll make a little bit of time to take some chart requests, especially if we've got some nice market conditions. We'll look to catch some scalps together. So until then, have a fantastic week, and I'll catch you all around the nest.